Oh, hey, the microphone works on this setting. Morning. There's a question, hey Wayne, is there a video on how to install the templates? First of all, there's an auto installer, so you just run the file and it installs everything for you. But YouTube probably has, I don't know, 1,000 videos on how to install. Anywho, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Oh, the microphone works over here. How nice. Hey, my name is Wayne. I'm a currency trader, not just a male model. I'm also a currency trader, which is really cool. I like to go from sort of the engineering world to the art world, back to engineering. It's really a cool thing. So I like technical analysis. I like fundamental analysis, and I like you. So let me know how I can help. Today we're going to watch the charts. And that's about it. I'll answer questions. We'll go through the charts. Yeah. This is what we want. We all want this. It's part of the routine. I hope that you see this as, our daily live stream as part of your routine as a trader. So thank you for being a subscriber. I appreciate you. Let me know how it can help. Is it technical? Is it fundamental? Is it psychological? Could be. Yeah. In fact, I was thinking about writing a series of books, but not about trading. And I thought, you know what? If I was going to write a series of books, if I was going to be serious about it, I should write a series of books on trading. So that might be interesting. The question is, do I have the time and wherewithal to write books? I don't know, maybe. So anyways, the bottom line is I'm here to help. I want to know how I can help, and then I will share what I've learned. A lot of the things I've learned over time have been the wrong way of doing things. Ow, that's hot. Ooh, don't touch that. And I'll share that with you. Some things I've learned work, so I've kept those. So imagine that I've found at least 1,000 ways to fail and a handful of ways to succeed. So I just kind of skip all the other things and just get to the handful of things that seem to work. Okay. So we can cover all that. Just let me know. Besides these videos that I do every day, if you look at the description below, you will see links to a lot of different things. One of the things there's a link to is the oil trading crash course. The oil industry crash course. It starts today. Today. It's going to be the day that I'm going to throw back to you somehow. No, it starts today. So between today, like right now, it's open. You're ready. You can start doing the videos. Between today and Sunday afternoon, you will go from knowing maybe a little bit about oil to knowing pretty much everything there is to know. You know what an oil rig looks like. You know what the various roles are. You understand the step-by-step process of digging and then pulling the casing out and then putting new casing in and then pouring concrete. Yeah, there's concrete. Did you know that? When you drill for oil, you need concrete. And by the way, it's no joke. It's a lot of concrete. And you got to get it 5,000 feet below your toes. But then how do you crack and how do you frack? What's the difference between cracking and fracking? Well, fracking comes before cracking. But literally we go through all the different tools. This goes down the pipe and it goes there and it does this and this happens and this happens and then they move that and then the next step is to plug it and then another thing comes in and we got to do that and that and that and that and then you got to come through and then re-drill it out and clean that out and push this out and then put this other thing in. You might even learn what a quagmire is. Okay. Actually, Majib, that would be one of the books. I even have titles. But anyways, that's just one of the lectures, learning how to drill for oil, step by step by step by step. This piece does this, this piece does that. Then the oil comes out of the ground, so we got to talk about that. This pipe goes here. This equipment does this thing. Then it gets split out, and this hose goes there, and that hose goes there, and it goes into here. And here's how this machine works. It uses gravity and does this and then that. And gas goes out here, and water goes out there, and sand goes out there, and oil goes through there, and then it goes through this pipe, and it goes to this other machine. And this valve does this, and it pushes that rod, and this comes down, and then this goes in here, and then there's a heater coil, and then that goes up to this temperature, and that goes to this, and that goes that. And so that comes out that pipe and goes out there, but this one goes out this and goes out to a meter run, out to that, where trucks come in and hook up to that meter run, and this all goes and recycles there, and then it goes through there. So we go through that like every single piece of equipment. I'm not joking, where this valve goes this way and pushes up a rod there, and that pushes this out and releases that. Step by step by step by step. Then we go into things like refining. And I literally show you how this thing goes up to the top, and then that comes through there, and it goes through a cooler, and this goes out this way, but then this goes back and gets recycled, and then it drops down, and then it heats up, but the stuff at the bottom, this comes out and goes there, but this other stuff goes back and pushed back through into a reheater, and then up and through out, and then boom, 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 boom. Like, you're going to go through and be able to look at a refining facility that right now looks like a moon base. Looks like Elon Musk built this facility on Mars, and you're like, that's what life on Mars looks like. No, that's an oil refinery. And you'll look at it and go, I know what that is, and I know what that is, and ooh, that circular thing, I know what that is. Cool. You'll know the legal contracts. You know the supply and demand. You know where oil will come from. You know the differences of oil. You'll know about tar sands. You'll know about the supply and demand economics. You'll know about the major reports that come out and create volatility. Holy smokes. All of that, I'm telling you, $99. It starts today. It ends on Sunday. This is your really last chance. If you sign up tomorrow, I don't know if you're going to be able to complete it. You would really have to work hard Saturday and all Sunday. It's doable, but I recommend you sign up now and start. Because tomorrow is a monster day. So you got to get through the today's lectures and start early tomorrow. Okay? It's about 15 hours of lecture. Okay? I got 99 problems, but oil trading ain't one. So anyways, so take a look at that. Also in the description below, there's a link to my book. There's a link to FX Bootcamp, and there's a link to Trader's Way. If you'd like to trade Forex, Trader's Way. If you like to trade gold and oil, Trader's Way. Tradersway.com. I consider them a trustworthy, ethical foreign exchange brokerage firm. I've tested many, but this one's mine. Peter says, what happened to MetaTraders? They sued me. Yeah, MetaQuotes sued me. They thought it was bad that I promoted tools to use on their trading platform. How stupid could you possibly be? I'm like, wait, I'm promoting the use of your platform by building and distributing tools for cheap. Take it down or we will sue you. I'm like, okay, you're stupid. You're going to go out of business. Whatever. Yeah, seriously, isn't that funny? So, hey, they don't want me to promote the use of their platform. Hey, I still use it, but they don't want me to promote it. That's fine. I have a feeling they're going to have their customer base move over to TradingView. I don't know. So that's that. So I apologize to everybody here. I was trying to find a way to help and provide tools that I like to use every day and things that you might find useful. And they only worked on the MetaTrader platform. So in that case, if you liked that, you would have to use it. But they don't want me to promote it. So, okay, life, right? Life goes on, right, Felipe? Yeah. But how old school could you possibly be? What kind of business background do they have? And what kind of degree do they have? They should have said, oh my God, this guy is promoting our platform and tools to make it better and easier and more productive for our users. We should sponsor him. That's what they should have done. Isn't that funny? They should have said, in a modern way of thinking, they should have said, oh my God, this guy is awesome. We want to sponsor it. Hey, Wayne, how can we help? That's what a modern version of business would be. Oh, but you can't use the letters MT and 4 on your website. I'm like, dude, these are tools for your MT4 and MT5 platform. You can't do that. We're going to sue you. You should go to hell. Go to hell, Wayne. I'm like, whoa. Okay. So I took it down. Isn't that funny? Cool. Thanks, MetaQuotes. This may or may not be a platform that starts with the letter M. It could be, it might not be. I'm not legally allowed to say what trading platform this is because there's copyrights, trademarks on these letters. So it may or may not be a trading platform that starts with an M. Hey. Right. But Jeep says, why don't I use TradingView? People used to ask me, why don't you use a platform that starts with the letter M and ends with the number 4? How come you don't use that one? I used to use something else. Hey, these things come and go. Okay. There was a time when I had to pay, I think it was $250 a month for my charts. Just for the charts. But then you couldn't trade off the charts. You had to, that's what a trading platform was from your broker. So, hey man, I've done things. Okay. This is what your brokerage account used to look like. It was just that. It done differently. And you had actually different, right? You had different information here besides the bid and the ask. And I'm writing essentially a lecture on how I used to trade when I first started. And imagine now when you opened up a Forex trading account, it just kind of looked like this, but it had different columns. It had the bid, the ask, but it had the high, the low. It had the overnight vol, the volatility. Was it did this pair move up and by how much? Did this pair move down and by how much? And some other information. And I used that to do quantitative analysis before I even wanted to think about technicals. Okay. Oh, looks like oil traders probably got knocked out. That's that. Oh, this one didn't work. Wah, wah, wah. Okay. Whew. So yes, if you join FX Bootcamp, you get those tools that used to be distributed on a website that had the word, the trademarked words on the page. Well, no, those trademarked words are not on the page. They're also inside a password protected website, so it's non-public domain. And in there, you get all the tools for free. So it's not publicly promoted or distributed, and it don't use the secret words that meta quotes are so worried about. Talk to the lawyers, Darko. How many thousands of dollars should I have wasted on that? I don't even have the time, but like, I was distributing software for $5. So obviously I'm not making any serious money. So what am I going to do? Pay 25 grand and fight and say, I have the legal right. Who cares? Right? Right? What did Jay-Z say, right? See how tough you are when the canines come. I got 99 problems, but a pip ain't one. Okay? Something like that, right, Jay-Z? Yeah, let's see how tough you are. You want to fight for your freedom? Look, I don't have the time and I don't want to spend the money, so they don't want me to promote. I won't promote. They get what they want. I just move on. You guys lose, though. All right, so let's take a look around the world. Okay. A bit of a blip here, and we saw it in oil, and now we see it in the dollar moves. These are the scalps I did right after the inflation news. And earlier this morning, I was up 500 pips on my scalps. Those are just the dollar trades. All those other trades, remember, I was up like 1,000 pips on a dollar yen, and I was up 200, 300, 400 pips on a bunch of other yens. Oh, I'm out of all of those. These are just the inflation scalps on dollar pairs that I did a few days ago. Yeah. So, hey, man, 400 to 500 pips is not bad. That's how you scalp, bro. Oh, but Wayne, I thought scalping was taking out 12 pips. Yeah, well, for you. I'm trying to teach you something better. You can scalp and make hundreds of pips on a scalp. That's what we do. Anywho. So things are coming back. But again, like one of the things we talked about last night in the swing trading group is holding steady on our course. Right? No, nose to the wind. And things like Great British Pound are now down quite a bit again. We're only 1,400 pips away from parity. Andrew says, the indicator you just showed is your intellectual property. Yeah, because I developed it and paid for it. Yeah, it's mine. Great. So I can hire a bunch of lawyers and go to court, present my argument. Oh, but it's mine. I own this. I'm allowed to use it. And then they come out and are like, yeah, but you're using our copyrights and our trademarks. And I'm like, and we just go through an argument, and who wins? Who wins? The lawyers? Yeah. That's that. So, yeah. Oh, I know. And I had another friend, he's like, no, how dare you should go, you should fight it. I'm like, I know, I get it, dude. I got bigger fights. Okay? In the end, they'll go out of business because they don't know anything about marketing. They're threatened by me promoting their tools. Seems like a strange thing to be threatened by. No, those would be completely different programming languages. Anywho, but this trading platform's great. The major reason I eventually did flip over from Dealbook 360 to this platform was it was faster. And the reason it was faster is like in a view like this. It's only running these charts. See all these other setups? They're not running those instances. In the Dealbook 360, the software is running in the background to keep all these other chart setups up to date. Well, that's consuming energy and processing power. And what ended up happening is I looked and traded so many different markets and looked at different charts on different time frames that it bogged down to the point where it just couldn't run. Okay. So that's why I switched over. It was more efficient in its right. So let's take a look at the markets long term. Okay, dollar's regaining its strength, but yen is now getting strong. Ha 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 ha. That was another theme that we talked about last night in the swing trading group. The rationale for this, and you probably know the importance of Wednesday of next week. And you're like, oh, the Fed meeting, right? No, we're talking about the Japanese yen. Lucas says NFA killing GFT didn't help either. Well, the regulatory compliance got really high, that's for sure. They didn't kill GFT. GFT actually, what actually happened, in my opinion, is yes, Lucas, the NFA was a big reason for consolidation in the industry. So we used to have second tier, mid-tier, and then some top tier brokers, right? Top tier being like Forex.com or something, right? And then we had middle tier and lower tier brokers like IBFX, maybe. We'll say they were smaller, more boutique-ish, third tier. Then you had GFT that was somewhere close to top tier, maybe mid-tier, but close to top tier. And a bunch of others. There was FX Solutions, right, where Joseph Trezovani used to be at, and you probably know Joseph from FX Street. I knew him from his FX Solutions days and his team. There were a lot of different brokers, obviously FXCM, so on and so forth. Then regulatory compliance went through the roof, like through the roof. The NFA went from not giving a damn about Forex to, in my humble opinion, over-regulating it. And not just over-regulating it, applying stupid, no sense rules to the Forex industry. For example, your disclosure document, if you were a commodities trading advisor and you were going to get, you were required to give a disclosure document that disclosed all the risks of investing into your Forex fund. Makes sense. Love it. But what they did is they took boilerplate risk warnings, if you will, that were required in your disclosure document. And not just required to have, but some paragraphs had to be fully capitalized, right? And at certain font sizes, like big and bold, right? And it was pages and pages and pages of this stuff. Now, remember, the document was designed to inform potential investors of the risks. I love that. I loved talking about the risks. But the NFA came and said, well, you have to use all of this stuff and you have to put it in there or we can shut you down. And about 90% of it was completely irrelevant to Forex. It had nothing to do with Forex. It had to do with the futures market or the options market. It was just like stupid. So what had happened is eventually your DDoc was like 100 pages thick. Most of it had nothing to do with Forex, but was required by the NFA. So you would hand it to a client and it would make no sense to them. It was like government thinking of their job is to protect clients, and all they did was confuse clients. And I would fight against it. I'm like, I don't want this in my DDoc. This is about Forex. All this stuff has to do with like clearinghouses for futures contracts. Like we don't do that. And this is options. And like we don't do that. And like get rid of this. Get rid of this. Let's just get down to the Forex stuff where yes, there can be all kinds of problems. The broker, their platform might break down. Trades might not clear. You can get gapped. You could, but what do you mean about liquidity? Like Forex is cash. There's no liquidity problem. Why would you have liquidity risk? It's by definition liquid, So like whatever. But the NFA came in because they were not regulating brokers. And then a lot of people got burned. And then we went through a financial crisis. So now they're like, oh my God. So then they came back and over-regulated all the brokers. Over-regulated. So like when I visited FXCM one time on their their New York offices on Water Street, 2/3 of the office were compliance people, just running reports for the government. Just crazy how much money they had to spend. So what happened was it just got too expensive to be a broker in the United States. Even if you had 20,000 clients trading every day, you'd think it'd be like raining money, but all that got sucked out because of compliance. So then they all consolidated. And that's basically what happened, Lucas. Suddenly you couldn't have 20,000 clients trading every day because you were not making enough money to pay for compliance. So they all had to consolidate so that you could have 100,000 clients to maybe break even, right? Because it all just went to cost. It was that costly. And then, of course, they jacked up what we call net cap requirements, how much capital you have to have. And suddenly it was like, I think a broker needed like 5 million in cash. Like imagine you wanted to start a foreign exchange trading brokerage in the United States. You're like, hey, I want to start one. I think maybe you have a better platform and you want to make it a brokerage. And you're like, I'm going to provide better customer service, a better trading experience, better everything. I want to go out and compete. I want to have an opportunity to compete. I'm a capitalist pig dog. I want to do better than what exists. And the NFA comes up and says, well, okay, that's great. You can build all that and you can set it all up and you can hire all the people and all that's really great and build all your technology, great. But just to start, you're going to need 5 million in cash. And you're like, why? Well, it's your net capital requirements. Well, what is it for? To protect your clients is the answer you'll always get. And you're like, but how does that protect your clients? So anyways, you're like, can you imagine that the government says you want to start a company? Any company. Just imagine you want to make widgets and gadgets, right? And you're like, good. You want to make a new widget. Great. Oh, by the way, you need $5 million in cash. You need to put it in an account and never touch it. And then you can start your business. And then you can go out and find customers. And then we're going to overregulate you. And all of a sudden you're like, well, it'll take me years to get $5 million in cash, even if I was running a successful business. But I mean, so what it does is it's a barrier to entry. So suddenly, what is it down to now? FXCM? No, oh, sorry, they're gone. Wait, they used to be the biggest. So now who's left? Forex.com and then Owanda from Canada? That doesn't sound very competitive. So anyways, that's where we are. Okay. Yeah, I'm all for regulation. I'm all for it. I'm all for disclosure. I'm all for transparency. I'm all for protecting the client. Love it. I love all of that. So I love the reason and rationale for the National Futures Association. I love it. I think it's necessary and needed, and I want it. Bring it, but in true government fashion, I think they do a terrible job. All right. So, dollar going up. Jim says minimal regulation. No. Well, I don't know about minimal, but I want, how about like, oh shit. Sorry, my neck. How about competent? How about competent regulation? Yeah. Yeah, I was so mad at a time I thought I would start like a Forex Traders Industry Association and do, instead of FX Bootcamp, do it through that industry association. So I'm like, you can have an annual membership and you'll get some education. We'll do some special events and we'll have special speakers and it's all about Forex traders. But I would also try to lobby the government and the NFA and, and various other regulatory, maybe the SEC, which now is cool because I took a class with Gary Gensler. Now he runs the SEC. He used to run the NFA. So anyways, I thought it'd be cool to like do some lobbying and stuff like that and try to not get rid of the NFA, to help. You have to think about that. My experience working with them on multiple audits was, I want to help. I want this to be better. I don't think small foreign exchange traders, small foreign exchange brokers, small foreign exchange CTAs, I don't think they should be criminalized. And if we all want to protect the client and protect the trader and keep the trader on the path of righteousness, then it should be done better. It shouldn't be expensive. It shouldn't be confusing. It should be easy and informative and helpful. Let us help you become a fantastic commodities trading advisor focused on the Forex industry. That'd be right. Wouldn't that be nice? The way you do it now is you become a member of NFA, pay money. And then you say, well, I want to be a Forex trader. I don't want to be a futures trader. I don't want to be an options trader. Oh, well, you have to declare that. Okay, I'm declaring that. Oh, well, there's another fee for that. You're like, what? Yeah, so you have to be a member of the NFA, be licensed as a commodities trading advisor, and then declare yourself a Forex firm and then pay extra money because you're a Forex firm. Well, why do I have to pay extra money to be a Forex firm? Why can't I just be a member of the NFA and be regulated as a commodities trading advisor? Oh, well, there's just a separate fee for that. But why? You're taxing me based on my asset class? But if I was a Forex futures trader, I don't have to pay the fee? Just like, Okay. Anywho. So pound's still coming down. Great. We're shorting that. Kiwi's coming down. That's great. We're shorting that. Aussie's coming down. That's great. We're shorting that. Euro going up. It's not great because I'm not buying it. I don't even know if I'm actually still short on that scalp or not, but it's probably not working out great. Kitty CAD is the one I'm most disappointed in, but its greatest trading partner is the United States, which is going into recession. That's why this is strong. And also many commodity prices, if not all commodity prices, are significantly down. Okay, so that's disappointing. On the long run, I want to buy Kitty CAD. But I look at that and I'm like, not today. And then yen, this makes sense on the short term based on the wink, wink, nudge, nudge, the importance of Wednesday evening, not the Fed meeting. That's Wednesday afternoon. Wednesday evening, there's something going on. And that makes sense here. So we'll see. Okay. Awesome. Okay, so where should we start? Well, let's do dollars. We'll go back here. Aussie, what do you think? Well, obviously we had a big move related to the higher than expected inflation number. Remember, it's only higher than expected. How do you say it? How about this for an argument? There's flaws to this argument, but let's make it. For those that thought inflation was transitory, and I don't mean a year and a half ago, I mean recently, okay, that it should be all fixed by now. It's imminent. It's just around the corner. We've hit peak inflation because enough time has happened. And those types of traders, the hopers and the wanters, I want this, I think this, what'll happen is they're just wrong. What are the major reasons the United States has not had inflation over the decades? What are some of the reasons? Why do you guys think the United States and much of the world has not had serious inflation for 40 years? What has occurred? Well, Johnny says QE. QE creates inflation. It just wasn't able to do it. Supply of what? Now you got to think big. Think bigger trends. Bigger than this, guys. Think. Why have TVs gotten bigger and the price falling? Decoupling of gold. Imports and exports. Well, otherwise known as trade. So let's go there. That's one of them. Trade with whom? From China. Now, that allowed prices to fall because Chinese wages were low, terribly low. Okay? So we'll say international wages were lower than the United States, and therefore we traded with those countries. Somewhere around Donald Trump, remember he was trying to renegotiate trade agreements? I'm not saying there was a problem with that. In fact, I agree with a lot of what he was doing. We still had trade agreements based on deals we signed, 25, 30 years ago. So, but to do that, he had to start basically a trade war and slow trade down, starting around Trump. Then we got hit by COVID, and then, the rest is history. So trade around then with China started falling. But meanwhile, over the last 20 years, wages in China went up and up and up and up and up. Okay, international wages relative to U.S. wages. Remember, U.S. wages were flat, but it didn't matter because prices kept falling. We were in a low inflation world for a very long time. One of the major reasons was we traded with foreigners that had lower wages, so we got better stuff at lower prices. So the standard of living went up. But international wages going up relative to U.S. pushes up prices. Okay? And less trade pushes up prices because there's less stuff to buy from foreigners, so now you got to buy more domestic stuff. So lower trade and higher international wages have led to inflation. Okay? Now, there's also this idea of like I was thinking like how like food and energy, okay, add into this. Okay. And I think throughout most of the last 40 years, food and energy was fairly cheap. I grew up in a food producing part of the world, and I remember, look, I wasn't a commodities trader as a child, but I just remember farmers every year were in trouble. Okay. Okay. Every year they were in trouble. Okay. So food and energy for most of this period, except for when China started really growing, there was that, 6 year, when we're talking about BRICS, Brazil, Russia, India, right, and China. Much of which was actually not actually true, but we'll say certainly China and India, for example. There was a period when they pushed food and energy prices up, and then we did have some inflation. There were some problems. But much of the last 40 years, food and energy were quite low. And so you could build a BMW in Germany for cheap because they could get energy and food pretty cheap. Now there's going to be a problem where, like a Mercedes or a BMW, the price of these cars are going to go up significantly. One reason is the factory has to pay 600% more money this year for energy. That's inflationary. So say goodbye to a cheap Mercedes lease. You're actually going to need to be rich to buy a Mercedes in the United States. Instead of trying to appear rich by leasing your Mercedes, you're like, well, I got $1,000 a month. Okay, great. But now the problem is your $100,000 Mercedes might be $140,000, and it's just too much at some point. Some of these cars are getting really, really expensive. You can spend $200,000 on a Mercedes in the United States without too much problem. It's a nice one, of course. But in other countries, they're already $200,000 because of the government taxes, right? So now your $200,000 is $400,000. But anyways. Okay. So anyways, so I'm looking at some of these trends where I'm very concerned about food and energy prices long term. I think it's not a prediction, but I think it's reasonable for the potential of a shortage in energy and other things that come from crude oil and natural gas. One of the major things is fertilizer. Okay? And if you can't afford to use fertilizer, what does that mean? Just less yield. You will just have less food. We might have the same number of farmers, we might have the same amount of farming land, but if you use less fertilizer, you will get less food. I'm also concerned that the average age of a farmer in the United States is 58. So in 7 years, the average farmer will retire. Well, ask the farmers' kids, are they becoming farmers? And the answer is not a lot of them. So yeah, we're going to transition, right? We're going to transition. It's all going to be robots. Self-driving tractors and stuff. Okay, yes, agreed. Just like we don't need gasoline anymore because it's all going to be electric cars. I agree. We're all going to go to electric cars, but no gasoline and no diesel. And, the example I used last night in the swing trading group was in 1992. And by the way, I'm wearing a t-shirt from 1992. I don't know if I can show this. 1992. That's when I was in that leadership conference or organization where I ended up being on the board with George, Mr. Soros. But anyways, what are we going to do if we run out of farmers? This is what I'm getting at. Oh, the paperless office. That was the one I gave yesterday where I'm like, in 1992, the internet was showing up and we were talking about the paperless office. It's all going to be email, no more memos. Everything's going to be digitized. Well, let's say you go open up an investment account at a wealth manager and you meet with one of these big firms and they're like, good. And they give you all the paperwork. You do all the paperwork and then it gets scanned. Now, of course, you're like, Wayne, I just opened up an investment account and we did everything digitally. Yeah, well, I live in Georgia. There's people that still believe the devil is in the technology. How to use this dang fangled cell phone? I don't know how to check the email. So anyways, okay. All right, let's get back to this. All I was saying is if we run out of food, if we have a shortage of energy, we have a shortage of farmers, we have a shortage of fertilizer, prices are going up. If China reopens, that's great, and we'll do more trade, which will help, but wages in China and wages in India are going up, not down. There's a lot of inflation that's not going to go away ever. Right now we have wage inflation and we have rent inflation, or what's called rent equivalent. So if you are who does rent equivalent? The Atlanta Fed? I think it's the Atlanta Fed. What they look at is if you were to rent your own house, what would your rent be? Okay. So how do you get rents down and wages down? You got to get kicked out of your apartment, kicked out of your house, kicked out of your job. Why would a landlord lower rent? Because they desperately need somebody in the empty apartment. Why would you take a job that pays less? Because you lost your job and you're desperate for money. You're like, hey man, this is not my dream job and it even pays me less than I used to make, but I got to pay my rent. So if the government comes in and says, don't worry about it, you don't have to pay your rent, then wages stay high, bro. High. You have to stop. You have to let the forest burn once in a while. The forest needs it. Forest fires are natural. Slowing economies are natural. The more the government gets involved, the worse it's going to be. So you can't slow the economy down and then bail people out at the same time, because then your inflation stays around. So anyways, so that was the question earlier. And then somebody had another question about 2%. You call 2% no inflation. I call Mark. That's so threatening. Anyways. But anyways, yeah, you call 2% no inflation. Well, the reason for that, okay, this is what we want, and this is what we had for a long time. The U.S. economy over the last 50 years averaged 2.2% growth. So if interest rates are 2%, or let's say inflation is 2%, because obviously rates and inflation are tied together, but everything's fine. The economy is growing faster than prices are rising. That's why, Mark. So 2% is usually the neutral rate for inflation, for interest rates, let's say. Little higher if you want to cool it down a little bit, a little lower if you want to speed it up a little bit. That's how the central bank worked for a very long time. Bern says, we have a lot of farmers in the Netherlands that want to leave. Yeah. Ship them to the U.S. That's how it worked. The other problem, we can talk about that, about wages, and again, kind of around Trump's wall, when you don't have people moving to the country, wages go up, and that's inflationary. See, when you get new members of society, whether it's young people or immigrants, okay? Young people and immigrants take lower wages. Maybe they're doing lower skilled jobs, maybe jobs that need less language skill, right? Maybe need less education, although many immigrants that do come to the United States have higher education and stuff. Great. But nonetheless, very often they take lower wages and they keep prices down. So when you stop that process, wages go up, and that's inflationary. Assuming they work and don't, in criminal work. So I'm not arguing good or bad. I'm arguing the economics. If you look at countries that have younger people and less skilled workers, prices are lower. That's it. So I'm not making an immigration play. I'm just saying, in a country where the average age is going up, wages go up. Because older people, let's say a 40-year-old versus a 20-year-old. 20-year-old gets a paycheck on Friday night, goes to the bar, and it's models and bottles, and they're just trying to have a good time and find somebody beautiful to dance with. A 40-year-old misses those days. And now has a mortgage to pay, a Mercedes lease to pay, right? A spouse to pay, children to pay, retirement accounts to pay. And at the end, no models, no bottles, and your lower back starts to hurt, just like your dad's. Okay? So, in order to pay for all of that, you need to earn higher wages. Luckily, your skill went up over time, and so you're earning higher prices. And then when you get older now, you got to pay for medication, you got to pay for health issues, you got to pay for the fact you're not working, all that kind of stuff. So the older society gets, the more it costs. So when you look at Japan, it's a very old society and costs are very high. In the United States, we are getting older, and now society has to take care of baby boomers. And the hippies caused all the problems, and now we got to take care of the stupid hippies. Whatever. So now they're going to be a drag on the economy. It just is. But then you go to the average age of a person in Vietnam or the average age of a person in Saudi Arabia is very, very low. And the costs for society of taking care is very, very low. Young people live cheap. They don't get sick, so on and so forth. But China, the wages in China have gone up a lot. Okay? I've been to China on business. I've been to China as a diplomat. I've been to Chengdu. I've been to Beijing. I've been to Shanghai. I've been to Guangzhou and Shenzhen and Hong Kong. So I've been around and I've seen a few things, and it doesn't look like a third world. But I was in Beijing long enough ago to see entire neighborhoods go away. And that's inflationary if you think about it, because you're expanding. But their growth was high. They had 10% GDP. So if inflation was 3%, but growth was 10%, not a problem. Just go, 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 go. Tearing down the old neighborhoods, entire neighborhoods at a time, and putting up brand new neighborhoods. Okay? Imagine not just your childhood house gone, but all the streets and all the schools and all the businesses and your neighbor's house and your friend's house, and just everything is totally gone. There's nothing there. Even the streets are gone. So where your house was might be in the middle of an intersection, or it'd be in the middle of a shopping mall. It's just like nothing exists. Your childhood is literally gone. That's how China was. But now China's not growing at 10% or 9% or 8% or 7% or 6% or 5% or 4% or 3%. Okay? And that's inflationary because now, when they reopen, of course, because closing the economy is deflationary on the short run because you're not trading, but it's inflationary on the long run. Right? So the problem is when inflation is higher than growth, this is going back to the answering the 2% issue. Once inflation is higher than growth, now you got a problem. Did I see any ghost towns and stuff? The first time I was in China was a long time ago, and I was under guard. So I got to see what I got to see. But I wasn't like able to cruise around. Now, I got to see a lot because I got tours of things. But it was interesting. So I was in this hotel. I was at the top in the penthouse of this beautiful hotel in Chengdu. And, you know, it must have been 3,000 square feet, which is pretty big for a hotel. Not the biggest one I've been in, but nice. And it was one of these things where, you know, the bathtub was hand carved out of marble and all that kind of stuff. Like it was legit, right? And I want to check things out. I want to like check the place out. And so I went down the stairs a couple of floors and went out onto a floor for the Chinese. No lights on in the hallways, dark, tiny. It was just like, oh my God. And then the other thing is the view from my room was one thing, but then a view on the other side was a different thing. So the view from my side was modern China, which is really funny. East-west. I don't know if that was true, but you know, looking out west, it was all beautiful and modern. But walking down one of the dark and dingy and rooms for Chinese guests, cleaners were cleaning one of the rooms, and I just kind of walked in like, "Hey, ni hao." They all looked at me like, "What the hell are you doing here? You're not supposed to be on this floor." And I looked out the other side of the building from the Chinese section. I looked out that. I just wanted to see a room where someone from China stayed, and it was nothing like mine. No hand-carved marble bathtubs, right? And I look out the other side, and it looked like a war had taken place, and it was just bulldozers just pushing things down. So ghost towns or neighborhoods, not in the sense of like skyscrapers built and left empty. That didn't exist then. But I wasn't allowed to see sort of real China. I was only allowed to see the China I was allowed to see. But it was pretty cool to go as a diplomat, though, and have that experience. But I have to go back to Beijing because I wanted to go to the old part of town and get some duck. Oh, my God. Peking duck? I'm in Beijing. I got a Peking duck. No, I could only go to like the fancy restaurants and stuff like that, where everything is bright and sterile. And I'm like, this is not what I want. I want real Chinese food. And wasn't able to get that on that trip. But I still have my ticket as a diplomat to get into the People's Hall of China, which is really super cool. It's not something that you can just go see as a tourist. So it's kind of cool. And I also remember getting out of the Audi, the chauffeur Audi, and I'm looking at the People's Hall. I'm like, holy crap, this is amazing. It's like going into Congress, right? And someone said, turn around, turn around, turn around. I'm like, oh, this building's huge. He's like, Wayne, turn around. You got to see this. So I turn around. It's Tiananmen Square, the Forbidden City. I'm like, holy. It was just amazing. Like, holy crap. So I got to go back for the duck. And as a diplomat, I wasn't really allowed to go see the touristy stuff. So I got to go back, check all that out. So yeah, so big problems, guys, maybe on the long run. What does all of this mean? This big drop had to do with a lot of people thinking inflation will go away because we've had enough time. The Fed has risen interest rates enough. It's about to turn the corner. And I would argue the Fed can do almost nothing about inflation unless they really put people out of work. I don't know if there's enough political wherewithal for that, either at the Fed or at the White House. I mean, like, let's go back to 10% unemployment like COVID just hit, but bail nobody out. Don't give people stimulus checks. Don't give corporations money. No quantitative easing. People have to lose their jobs and not have government benefits. You have to lose your job and get no money. You need to be hungry enough. Your children need to be hungry enough that you will do a job you don't want to do for not enough money. People have to lose their house. People have to get kicked out of their apartment. People have to go hungry. People have to be uncomfortable. We call this reality. So Grind says it sounds like the real issue is people have too much money. That's what it is. That's exactly what it is. Well, yeah, it's unfortunate because my belief is that the U.S. government created the problem, not the U.S. central bank. So the easy way out is to announce a 5-year plan of raising interest rates to pay for COVID. They should just say, look, we went through COVID. We had 10% unemployment. The government stepped in to save society. And it cost money. It cost $5 trillion from the Fed, and it cost $5 trillion from the federal government. The Fed is doing quantitative tightening, and it will take the Fed 10 years to retract their $5 trillion. Right now, quantitative tightening that has been announced will last for 5 years, and then it'll be about 50% of the $5 trillion. So the Fed is already doing the job. Thank you, Fed. Now, the U.S. government now needs to say they need to remove their $5 trillion. So here's what they do. They announce a 5, maybe 10-year plan, just like the Fed. They raise taxes and tell everybody it's specifically for COVID. Now, people are going to be pissed off because they're like, I didn't get COVID. Or, again, I live in Georgia. Half of Georgia thinks COVID is fake. It's just fake. There was never COVID. It was a hoax. Cool, that's their belief system. It never happened. It was all a scam. Okay. So they're going to be pissed off. They're not going to want to pay for it. Also, 90% of Americans did not lose their job. So they're like, dude, I didn't ask for this money. You gave it to me. Well, the government was worried that you had to build a home office, so they gave $5 trillion. Amazing. Where 90% didn't lose their job. So I would argue 90% of people didn't need the money, but whatever. So the way you do it now is you have to say, look, the government helped all of society out. And now all of society has to pay it back. So they raise taxes for 5 to 10 years. Call it a COVID tax. Don't be shy. Don't call it, American freedom and liberty tax. I mean, dude, just call it what it is. COVID tax. And over the 5 to 10 years, you take 100% of that tax revenue and you pay down the debt. It does not get transferred to somebody else. It doesn't, there's no stimulus, there's no program, there's no investment. It just goes to pay the debt. And that will lower inflation. That's what needs to happen according to Milton Friedman and Maynard Keynes, Sir Maynard Keynes. These are not new concepts. Okay? These are not new concepts. They're very well understood concepts. Okay. Going back to let me give you some color here. If this was people thinking that the worst might be over, and then this is the same people finding out things are not getting better, you have to decide where you fit on this process. Are you a bull or are you a bear? Okay. And then follow the money. So if wages are not going to fall, because look, if you're like, Wayne, there's no way the government's going to jack up taxes. Okay. The second thing is there's no way the Fed is going to raise interest rates so high that they create a mini depression where they purposely put 10% of people out of work. That we go to COVID levels of fear. There's no way the stock market's going to come down 75%. Okay. Then there's that. Okay. So the worst, okay, things are not going to get better soon. You're on this schedule here. And if you think things are going to get better soon, that we have hit peak inflation, core. Okay, oil's come down 20% because the market assumes we're going into recession. So oil coming down isn't good, but you might say, well, that's deflationary, so everything's over, right? The worst is over. Inflation's falling. Oil prices are down. Food prices are down. Everything's good. Lumber has crashed. Everything's good now. Because in the near future, you're going to lose your job. And you're not going to buy lumber and build a new deck. So there's no need for lumber because you can't eat lumber. The fear is that we get down to like, you're going to hang on to your food and your shelter for as long as possible. So anyways, so things getting better, up. Things not getting better, down. And you have to make the determination. Okay? So a week ago, not yesterday, but a week before yesterday, when we were here, I asked the group, dozens of us, I said, are things getting better? And I kind of set it up like I just did. So people obviously said, no. Things are not getting better. Have we hit peak inflation? No, it doesn't sound like it. So I said, well, there are two things. There's two moments in time in which we will learn that things are not getting better. It's either going to be CPI on Tuesday or the Fed on the following Wednesday. It's going to be one of those. And right now, what we want to do, and remember, we're way down here during the meeting. Okay, we're way down here during the meeting. Okay, that when we get to one of these, will either be at the 21 EMA or the 55 EMA. And somewhere between this zone here, we want to have the opportunity to get short. Because you think nothing has changed. So if this goes up a little or a lot, it's because somebody thinks something has changed. Things have gone from bad to better. And so we can try to continue that thought process. Up isn't necessarily good. I think what's really happening, because institutional investors, by the way, and I do watch institutional investing, I can see their position sizes. Okay? Nobody's buying this right now. Did you know that? I think it's 80% short or 78% short. So what does this mean here? Exiting shorts. Because the news is coming. So, before the news, when you hit targets, take some profit. And then when the news comes back, if it is as expected, which is only not better. I think that's all the rationale there was. You're like, well, Wayne, is it 0.2 or 0.3 or 0.1? Which one's good? Which one's bad? It's just not better. Whatever is what I'm trying to say. Because you're like, does it really matter? These numbers seem so small. Does it really matter 8.1 or 8.3 or 7.9? Not better is not better. So don't be shocked if we have another up. Because the next event, the Fed meeting. Cool. And you might find out, hey, maybe the Fed thinks the worst is over. That would lead to this. Oh, the Fed's going to stop raising interest rates. What do you think the Fed is going to pause? They're just not going to raise interest rates on Wednesday? That would push this up. What do you think? What's the likelihood of that percentage-wise? Well, let's look at institutional money. Okay. 0%. Zero is the answer. There's nobody. What if they only raised interest rates by 25%? Nobody, not one investor, not one institutional investor has said by 25 basis points. Well, what percentage say only 50%? None. Not one has priced in a loan, a bank-to-bank loan, based on the Fed raising interest rates by 50 basis points. Not one deal was done by smart money. Not even one. 0% chance. What percentage believes the Fed's going to raise by 75 basis points yet again? 84%. Do you guys remember looking at this 6 months ago? we had a lot of different ideas on where interest rates would be by now, right? This September meeting's a big one. Do you guys remember looking at this? And I was teaching you this in May. And we looked at the September meeting. I think we were projecting like 3.25 by now. And there was a whole bunch of other choices. Less than 3.25, less than 3, more than 3.5. There was a bunch of different choices, right? And I drew a distribution to that, and I said, there's the middle of the distribution. You want to look at the tails. We call this kurtosis. You want to look at fat tails, right? But more interesting, just are the contracts being negotiated moving to higher interest rates? Are there more and more people saying 3, 3.25, 3.5, 3.75, 4? Or are people adjusting this way and less than 3, less than 2.5? Is the Fed slowing down? Because remember, there was a time when the Fed was asked about raising interest rates by 75 basis points, and Jay Powell said it wasn't even being discussed. They were raising by 50 and were expected to drop to 25. So back in April or May, we didn't even think we'd really get to 3%. So there were a lot of, blue bars to the left. But now the blue bars are moving to the right. Maybe the terminal rate is 4 is what we're pricing in now. Okay. So let's go out. Let's go from Sep to, let's do the June one again, the June meeting. Okay, there's your distribution. Okay, so as I said, it's a normal distribution. Okay, this is the June. We've been tracking June now for 6 months. Do you understand? When we first started tracking the June 2023, this was the middle of the chart. This was the middle of the chart. So what did I teach you 6 months ago? 3 months ago in the swing trading group, I said, you probably need to check this chart daily. And if things are moving to the right, you buy the US dollar. This was the middle of the chart. So now, obviously, money is moving this way. And we went from an expected interest rate. Like I remember talking to another professional investor back in, when was that? July? We were having a conversation and he thought the terminal rate, and I didn't disagree with him at that time. Okay? Under what the thinking was at that time, that 3.75% was where the Fed was going to stop raising interest rates. So since July, now we're saying 4.25 is the terminal rate. This is 1 year from now. And it's not this is institutional, it's not even institutional. It's banks lending banks money. Okay, and so there's a price. What they do is, I'll lend you $95.60. And on June 14th of next year, you pay me back $100. That's the deal that was negotiated. So imagine banks are negotiating this. Okay? If I'm lending you if you're going to pay me $100 1 year from now, I want to lend you as little money as possible right now. If I can, I'd be happy if I can give you 90, if I only gave you 94. But you're like, wait, I can go to other people and they'll give me more. They'll give me 96. So your 94 will never get done. So you negotiate. What are the variables that you're thinking about? Well, inflation and interest rates over time, which is basically opportunity cost. So long story short, you don't have to guess. What are interest rates expected to be right now? Let's say, how could I say this? What is based on this, the terminal rate is expected to be 4.25%, let's say, maybe 4.5%. That's the interest rate. But how about this? Here's another way of looking at it. Okay? That's expectation of higher interest rates in the United States. Burn, just type in Fed Watch Tool. Look at this, guys. Are interest rates expected to go up or down? This is the yield on the 2-year. It's very short term. Well, I am explaining it. This is the yield on the 2-year U.S. Treasury. This is telling you that interest rates are going up in the United States. At this point, they're saying at least to 3.87%. But remember, way back in April, it was only 1.5%. Then by August, interest rates had double, or inflation, or how about this? Interest rate expectations doubled in the United States. And then, right, is up 30% since it doubled. And is likely to continue. Is it a big deal? Yeah, it's a big deal. Interesting. Why don't we look farther ahead? What will the interest rate be in the United States after the Fed starts or stops raising interest rates? So once we've hit the terminal rate, okay? So now you go here. Okay. Now it's displaying it strangely. Over that period of time is how it's doing it. That's strange. All right, well, we don't want to look at that. I don't know why it's doing it that way. 10-year compared to... Is it doing the right thing? It's displaying the change. That from the bottom, there's a 400% increase in yields, but on the 2-year, but only 100% increase on the 10-year. All right, but what it's trying to tell you is there's inversion. And what that means is in the next couple of years, interest rates are going to go to, right now it's saying 3.8, but let's say this is likely to go to about 4%. And that later down the line, 5 to 10 years from now, interest rates will be higher, but not that high. So that interest rates will come back down. And that's how that's being priced in. So you could look at the 2-year yield and say people, traders, investors, institutions, companies, corporations, entire countries and economies are investing into the U.S. Treasury market as if interest rates are going to go up. And we're also looking at banks negotiating banks as if 1 year from now, the Fed funds rate is going to be 4.25 to 4.5. And once again, you can continue watching this over the course of time. That might change. One of the things I talked about yesterday is that I don't think it's implausible that we go to 5, 5.25. Which means this, okay, which this used to be the middle. Now this will be the left tail, and the right tail moves to the center, which means all of this is shifting this way, which means, here it comes, the whole point of the morning. Get your pen and paper ready. Ow, that hurts my neck. Buy the US dollar.